world's on fire. Things keep blowing the hell up.
Hey guys, this is Rafi from the Endgame Investor, and I wanted to go over what happened to silver in December 2021. It might seem from the price action that nothing was going on. However, December 2021 was the biggest physical silver drain from the registered COMEX stockpile since 1997. What happened in 1997? That is when Berkshire Hathaway, under the direction of Warren Buffett, that investing guy, started to amass an enormous silver position. And December 2021 saw the biggest outflows of physical silver since that year. Let's go to the charts. Here we have a chart from Gold Charts R Us, brought to you by Nick Laird, showing the monthly drains of registered silver stocks going back to 1971. This up here is registered. Down here is eligible. The difference between registered and eligible is registered means they are available for delivery against futures contracts used for price discovery in futures trading. Eligible means it's just silver that is being stored by whatever party in the COMEX vault and has nothing to do with futures trading, but eligible can become registered if somebody tags it with a warrant. You see here that eligible stocks were never counted until 2001. So we see that this red line over here shows this number over here, which is 16.95 million ounces drained out of the registered stockpile in 1 month. The longest red line of outflows of registered silver since then was not here. This is just an accounting measure when they started counting eligible versus registered, so this doesn't count. Here is 1997. That line right there is slightly more than 17 million, and that is the last great silver drain from COMEX registered stocks. Now, what does this mean? Let's go to the next slide. Here we have the registered silver stockpile going back to December 2020. We see February 2020, we had a record high, 152 million ounces of registered silver, and that is when the silverbacks began the silver squeeze movement. And since then, we are down to 82.24 million. As of yesterday, it is now 81.9 million, I believe. Slightly more has come out yesterday. We see here a giant leap down in registered silver stocks. Overall, about 70 million ounces have been drained from the COMEX registered stockpile since silver squeeze began. That is very impressive. Next slide. And this gets interesting. You may remember in July of 2020, something incredible happened in silver. I know we talk about silver squeeze a lot, but we don't talk enough about what happened in July 2020. July 2020 was a record month for registered silver deliveries by contracts and by ounces and by tons and whatever unit. It was a total of 17,294 warrant deliveries, representing about 86 million ounces, multiplying each contract by the 5,000 ounce notional. 86 million. For July 2020, those contract deliveries, we see the registered stockpile just before the July deliveries began was about 85 million by this red line over here, whereas the July deliveries demanded 86 million. So more than there was registered silver on the COMEX. What happened? On the eve of first notice delivery day, June 30th, 2020, there was a sudden surge of about 40 million ounces into the registered category. Where did it come from? It came from JP Morgan eligible silver stock. That is the silver that JP Morgan typically uses to shuttle in and out of the SLV ETF. In July, there was an emergency and it tagged a lot of it, 40 million ounces about of its eligible storage silver into the warrant category. And since then, that has all been drained and then some by the silver squeeze movement and others, obviously. Now that we are down to about 81 million ounces. We are below where we were before July 2020, which means another record delivery month. And the next active one, I believe, is March or February. I haven't checked. If we have another direct record delivery month, we will run out of registered silver unless JP Morgan moves again. They might, it might happen, but things are very thin and very fragile on the silver futures market, just so you know. How thin and how fragile, I will show you a much longer term chart so you can get an idea. Here we have on the top, the silver price. And in the middle over here, we have the tonnage or the ounces, whichever scale you want to use, of the amount of silver in the SLV ETF. So we see here the 2011 peak at around $50, just below $50. And there was a sudden surge of silver supplies into SLV, which makes sense. It was a tiny surge compared to the surge that we've had since then. But, and this is the point. The point is from 2011, from the silver high of 2011, which is around here, where I'm circling with my little arrow here, my mouse, from there until around 2020, the end of the world as we know it, the amount of silver, physical silver in the SLV ETF was basically stable. And since then, it has been going up and up and up, which means that the demand for paper silver for SLV ETF, which means that there is some kind of inkling of silver as a preservation of value as a monetary asset. I know it's better to buy physical. We all know that. But the interest by the public in SLV, in paper silver, has skyrocketed since 2011. And they've had to put, and this is silver squeeze, this little bump, this big bump here, for the biggest inflow into SLV ever. Since then, it has fallen. But notice that the falling silver price from 2011 to 2020 did not really affect the silver supply, except when it went up from March 2020 to August 2020 to around $30. That is when the silver supplies in SLV skyrocketed to record highs, and they haven't really gone down since then. What I'm saying is the supply of silver in SLV has not really diminished since March 2020 as we know it. So the next silver surge, SLV is not going to have enough silver to cover its shares. And there's going to be a premium that will develop, I think, in SLV between the futures market and the ETF market. The ETF will have a premium. Why? Because they will not have enough silver to cover the shares, and there will be a dearth of shares and a lack of supply, which means the price will go up over the futures price, and you will have where SLV chases the futures higher, which chases SLV higher, and so on and so forth. You have basically
explosion.
Cool guys don't look at explosions. They blow things up and then walk away.
I believe that the banks that run SLV are doing whatever they can to free up silver supply from the SLV ETF so that it can be used to back futures contracts if there is a silver surge. But it's not working because the amount of silver in SLV has not dropped significantly, even with the silver price, since silver squeeze in February 2021. What I'm saying, therefore, is that the next surge in silver could be the end of paper silver, and we will see silver move up above $50 very quickly, and that could be the end game. Do I know for sure? No. From what I'm seeing in the instability of the charts and the drain in registered supplies, and the drain specifically in December being the largest since 1997, I can tell you for sure that the silver market is very unstable, and disturbing it even slightly could make it explode. This is Rafi of the Endgame Investor. Please support me by signing up for a 2-week free trial where I cover the gold and silver markets. If this happens, I will be looking at signs that it might be imminent. You can also sign up to be my patron on Patreon, where you will get weekly biblical commentary on economics and liberty. Please like and subscribe, and have a good 2022.